Right. So good afternoon, everyone. Thanks for the opportunity to speak about fixed income and interest rates. I really enjoyed the presentation by Mr. Aurora just now. Um, so my presentation is simple. Is sort of bringing it back home and what does all the geopolitics, what does all the noise with Trump, tariffs, global growth, etc. Well, our geopolitic um, main issue is to do with Venezuela. So I'll probably just briefly mention that. So let me start. So I'll run you through just a general economic context. It was already done, but I'll just briefly mention. Then I'll go into our monetary policy and the outlook, and then finally just some insights and takeaways. So to start, I know Mr. Aurora mentioned how good things were in the U.S., but I think in Trinidad is even better. We have 2.4% economic growth as well as 0.7% inflation. Uh, Although I think we could all agree that outlook is really for, yes, for the rest of the year, things may look better than they did last year. But if you look at the IMF projection for 2026, which is only 1%, and you sort of listen to the news, you look at what's happening locally, I think we could all agree that our outlook for our economic outlook, whichever party comes into power or stays in power, it really doesn't matter. But our production of oil and gas is down. We have some discoveries that really should have given us a bump maybe 2 3 years down the road, but um, I guess that's one of the major things that would affect the way our economy performs. The Yeah, so the central bank obviously has to try and manage interest rates as well as the exchange rate. So that's also something different with Trinidad, whereas in the US, you just focus on inflation and interest rates. Here we actually have to sort of manage the exchange rate, and we all know how difficult that has been to defend the peg at 6.8. So I'll go into that a little further. So in terms of the global rate environment, it was spoken a lot about earlier, but the Fed has remained steady for now, although it remains to be seen exactly what happens. You, I mean, personally, I don't think the Fed chair would be fired or removed. There is a degree of independence that should exist and typically exists, but we may see some changes in the policy going forward. Just to bring it back a little closer to home in terms of regionally. So, for example, the Bank of Jamaica, which I would say in all the English-speaking Caribbean, sort of gives us the closest to the US in terms of free movement of capital, uh, as opposed to countries such as Guyana, Trinidad, and Barbados, where the currencies are pegged to a certain extent. In Jamaica, the currency is allowed to float within bands. They also adjusted their policy rate in line with the US, whereas in Trinidad, for example, we would have seen the repo rate maintained at 3.5. So in terms of the monetary policy and market outlook, I'll start with the CBTD's unconventional stance. Now, I say unconventional, but the reality is other Caribbean countries who were managing a peg did maintain their rate as opposed to lowering it. Like, so in the case of Jamaica, Jamaica would have increased together with the US, and then they would have maintained and then and then lowered. Whereas Trinidad, we just kind of kept it the same. And next, I will go on to the yield curve, but I would argue that although our central bank maintains the repo rate or tries to influence monetary policy, a lot of our, I guess, financial issues or movement happens because of imported inflation, because we do import quite a lot. So if, for example, tariffs affect the supply chain or prices go up, even if we maintain interest rates at the same, our inflation still increases. There's also the fact that, um, sorry, yeah, I'll go on to the yield curve. Right, so in terms of the yield curve and the market structure, we have already seen the lower line is last year around this time, and then the one above is right now. As you could see, there's almost like a parallel shift from about just past the 5-year point all the way to 30 of about 25 basis points. But you could see there was a lot of movement and activity around the short end of the curve. And I mean, in the absence of central bank maintaining the repo rate, I would argue that there's actually been quite a lot of activity on that 1 year point between 1 and 3 years, which is a little more indicative of what is actually happening in the economy in terms of short-term expectations of the economy, just as well as market forces and what the market demands. There was also, I did mention the fiscal issuances. Obviously, it is an election year, so there would have been some additional spending, uh, and typically that did happen at the short end of the curve. Right, so fixed income outlook to the end. Now, I saw this survey where quite a lot of people thought that they would be flattening. I would argue, as Pernell would have mentioned, some of it has already happened, but I would actually think that there may be some steepening because there actually hasn't been that many long-dated issues of government bonds. So I think over time, because it's been so difficult to get government bonds, the large life insurers have sort of had to, take what's available, or had limited negotiating power. But I do think, given the outlook of the country, again, no matter what happens in terms of Dragon or if we're able to increase our production, the one thing that would actually help us, and we spoke about fiscal deficits, the 1 year we had a surplus was really because there was instability uh, between Russia and Ukraine, or anything to do in the Middle East does help us and our energy prices, right? So that, sorry. So in terms of the outlook, I do think the life insurers would expect higher rates of return if they are going that long out on the yield curve, let's say 20 years, 25 years, 30 years. So we just really haven't seen those sort of issues. So it's more, I would argue, some level of interpolation. There's not much trading in our market in the secondary, especially in the 20 to 30-year bucket. Just in my experience, this is people just buy and hold, especially insurance companies, because it's pledged against their liabilities. So it's harder to price those. Of course, there are reads that the central bank would reach out for, but I think that point is somewhere I think you would see some steepening between 20 and 30 years. There's also the fact that, let me just put back the yield curve. Right. So the other thing that I wanted to point out with this graph is that 1 year rates, all our short-term rates really have, the differential has come down a lot. I know Crystal mentioned it, but it used to be 4%, which was crazy, right? But now it's actually only down to 2. And I do see that converging in terms of that negative differential. Academically speaking, that should mean that as our differential goes down, it means that there would be less scarcity of FX. I think in reality, even if we float the exchange rate to, let's say, 750, I still don't see how that would really help, in terms of having a big differential, because people will still hoard currency, unfortunately, just given the outlook that we would have spoken about. So that's where sort of the currency ends up affecting the yield curve, especially given that this is a TTD yield curve. So yeah, I've already spoken to this. So you see, last part was a couple of risks and strategic insights. The Trump factor is the major thing. I do think as we get some more clarity, it would affect what we do ultimately, because we are price takers in the energy space. We do import quite a lot, so we kind of keep our eyes on what is happening in the U.S. Given that is the largest economy, they set interest rate policy. We do manage our float between the TT and the U.S. So uh, we'll continue to keep our eye on Trump and how what he decides to do with tariffs, etc., and how that impacts Trinidad, especially on the Venezuela front. I know there have been some news recently, but we still don't have proper clarity. And then the second risk would really be with the actual trade and tariffs, how it would actually impact based on what deals actually are made. Because I was reading something yesterday that basically Trump starts with a ridiculous ask and then sort of dials back as he's negotiating. So it would be interesting to see where a lot of these things end up and the impact on Trinidad, because we obviously import a lot from both the US and China. Um, so in terms of takeaways, I mean, again, this is me personally, focus on short term. Just because we've seen the flattening in the yield curve, to me, if you get 1 year at 4%, to get 10 year at 5% does not make that much sense, just because the risk of the duration, risk of the next 9 years, just for 1%, I mean, I think that's just my view. Until we see the steepening of the curve, I would stay very short. And we also get some clarity in terms of Venezuela and Dragon and some of those things in terms of outlook for Trinidad. I said additionally prioritize credit selection. Now, I mean, we don't really have much corporates, right? So when we do get a corporate, typically is like a Massy that is high quality anyway. So obviously, sort of stick to those. Um, Obviously, there are quite a few things that are being done to sort of improve the bond markets in terms of getting more issuances. So I do hope that that comes through to sort of provide more securities for us, because most of the debt financing is done via loans, as we all know. Of course, um, well, I know Mr. Shepard would talk about equities. So just to conclude, um, I think the main thing in terms of the outlook for Trinidad is really how some of the geopolitics affects us. Uh, I mean, unfortunately, we kind of hope that prices increase. What we can control is volume. Typically, in this case, seems like we can't fully control it. But outside of that, in terms of the yields, I do think stay short until there is some steepening of the long end of the curve. And I also look forward to the panel discussion to hear your thoughts, because I do think some of mine were different to the general consensus in the survey. So thanks a lot.